You're watching today's video technical update presented by FX Times. It is Tuesday, May 18th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the forex markets. Today I'll keep tracking the euro dollar, Japanese yen, and the euro pound pairs as they continue to consolidate this week. Finally, we'll take a look at the Aussie Canadian dollar pair as a continuing comparison of these two commodity currencies. The loonie is outperforming as anticipated. This video is being produced at about 1:45 p.m. Eastern Time during the US session. The euro dollar turned from consolidation to a continuation of decline today. Here we're looking at the 4-hour time frame. You see this consolidation. If it continued, if in the 1-hour time frame our RSI broke above 60 and went into the overbought zone, then it would be very likely that the market could ascend to the 1.28 area, which is 61.8% retracement here, and also this would be testing the gap from last week that was closed already though, but in the daily that would be 38.2% retracement. In any case, that doesn't that outlook should be shelved, and it looks like a bearish continuation. Looking at the 1-hour time frame, we have a short-term projection. If the market continues, first it's going to test the 1.2250 area. It's approaching that. That's previous low, and a break below that should head towards the 1.20 area. Okay, so that's the short-term projection, and we know that in the long term, well, now it's more intermediate term, our projection is to the 1.15 from this swing projection. Okay. So using this swing projection, we have a target of 1.15. However, first we have 1.22, 1.20. Alright, so that's the euro long term and short term. Tracking the dollar yen pair now, as the market has stabilized since we saw that spike 2 Thursdays ago. So this was last week, and the start of this week continues to be in this consolidation, although there is some bearish bias to this move. Looking at the 4-hour time frame, in the short term, a likely projection is towards the 91.25 area, which is 61.8% retracement, using this move up but truncating this tail. So that's the short-term projection at the moment for the dollar yen to reach 91.30, and then there might be a rally from there. Looking at the daily, we might be testing the 40 area again here. I don't consider this, this was a break of 40, but the market came right back, and this was a very event-induced kind of volatility here. So I want to wait for another showing of see if the market could test 40, if it could break it, or if the market could rally up and turn bullish again. But in the longer intermediate term, we see that the market is pretty much in this range right here between 95 and 88. Okay, so nothing significant really until these levels are broken. Okay, so that's the dollar yen in a channel, trading in a channel between 88 and 95. So let's follow up with the euro pound pair. I haven't looked at this pair as much since the break of 86.50, and then the market came up to test this previous power line, came back down, and again continues to consolidate or stabilize in a congestion pattern. So looking at the 4-hour time frame, this is the 8.8650 area. We see that we possibly have a AB equals CD retracement, or maybe CD could be a little shorter, short of the 0.8650 area, as this would be a resistance of 61.8% retracement. At the moment, the market continues to be in this uptrend, although price action in the last 8 hours in the US session and late European session has been bearish. So we'll continue to track if this rising trend line breaks, the market may test this 0.8450 area again. But I'm prone to think that the market would continue this correction to test this previous power zone at the 0.8650 area again. So that's the euro pound. You should note that in the fundamental side, the euro is pressured, but as well as the pound for their financial problems. Here's a look at the Aussie Canadian dollar pair as we compare these two commodity currencies. After months of pretty tight consolidation here, we had a break below the low here at 0.92, and after that break, if you remember, we were following this breakout and anticipating a pullback. And if we look at the 4-hour time frame, we saw that pullback in more detail, and then a very strong reversal right here. And now the market continues heading towards the 0.8950 area, which would be a simple pattern breakout projection using the width of this consolidation, projecting it in the direction of the breakout. Now 0.8950. Now let's look at the weekly. First, we note that the RSI below 40 here as well, and there's a kick here for continuation. Looking at the weekly, we also see a break of 40 in the RSI, so that's a strong signal. We are approaching, as we approach 0.8950, we are testing this 200-week moving average. So there's some support here. But if that breaks, if the 0.8950 breaks, also this is confluent to this rising channel, became rising support, became resistance here, and now possibly act as support. So this is a very important area, 0.8950, 0.89 area. If that breaks, then it may test this 0.8580 area, which is also an important support area. Okay, so that's the Aussie Canadian dollar pair. As the Canadian dollar dominates and the Aussie slides against it, we should see some support at the 0.8950, and if not that, 0.8580. Okay, going back to the daily, this is the short-term projection. And that's it for today. Visit fxtimes.com for more analysis updates and live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you good trading.